Yo, Market Scraper here. In this video, we're going to talk about volatility. There's been so much volatility in the stock market this past year, from this point in time to April of last year. And I'm going to show you my Robinhood portfolio, and we're going to see just how much volatility there's been. So let's jump into this. Now, before we jump into this video, don't forget to hit that smash button. And if you haven't already, consider subscribing. It really helps out this video. Much appreciated. Alright, so how much volatility has there been this past year? So much. Will there be more volatility going forward? Absolutely. So we're in a volatile time right now, and it's just going to get more volatile. So what are the things that you can do to make sure that you succeed in a volatile time? Well, you want to know? And you want to know too? All right, well, that's exactly why I'm here today. So first thing to do to put yourself in a good position when there's a volatile market is just having the habit of always consistently contributing to stocks and investing through good times and bad times. So right now is a bad time in terms of the stock market's going down instead of the stock market just going up in a bull market. And so make sure you're investing in bad times and good times, so to create that good habit of investing in a stock market. And just so you know, don't walk away like this guy. You gotta watch this video to the end. So this is opportunity in the stock market right now. It's like a really great opportunity. It's gonna be when you look back at this opportunity, it's like, why did I invest during this time? So that's what we're gonna look back on. I don't know when the bottom's going to be. Maybe we hit the bottom already. Are we going to retest the bottom? Are we going to go even lower? So I covered in my last video my brief thoughts of how likely I think it's going to go further from here, and then how likely it's going to be that we're going to retest, and how likely it's going to be if we go even lower. So if you're interested in that, I briefly mentioned that in the end of my last video on keeping yourself safe during this time with shopping and grocery shopping during this time. So anyway, in this video, volatility. So first thing, like I said, make sure that you're consistently investing in good times and in bad times during the stock market. And that ties into the next part. Is just make sure that you learn from history. So historically speaking, the stock market has gone up a lot and down a lot, and that's all that natural part of the cycle of the stock market. Another thing about history that's on our side is that the stock market has always increased in value over time in the long run. So that's a really good bet for if you're investing for 5, 10 plus years, and especially if you're following, whether you're investing in an ETF and following the indices, or if you're investing in individual stocks. If you have that vision of where the market's going to be going in 10, 20 plus years, you're going to be doing very well for yourself. Good to always have that long-term vision. And then historically speaking, it's always gone up. Does that mean that there could be some event that occurs that the stock market isn't able to go up as high anymore? Of course it's possible, but the odds are highly against that happening. And we tend as people psychologically to overthink the situation we're in now, that it's this is something that's completely different than anything that's happened in the past. You know, all the history and all the things that people have experienced in the past, it's completely different than now. And however, even though things are always unique in its own way, similar events have happened in the past that were similar reactions that people had to those incidences. Like, I mean, there could be several pandemics that have happened in the past that are similar to this one in some ways. But there's also events that happen in the past that might not be a pandemic, even a war, for example, that investors and people react emotionally in similar fashions than they're doing right now, or in maybe great economic perils in the past. So that's the key thing to look at, is how people reacted in those times. And in terms of, you look at the stock market, what's going on there, how much has been declining so far, the recent rally that we had right now, and does this make sense of, and can we find similarities to historical events? So those are interesting things. And just remember, any point in history, there's a lot of overweighted. We as humans tend to think that now is the greatest time ever, or now is the most advanced in this area. And whether that might be true or not, we need to check ourselves and really look at history to learn when people were able to build certain structures that we can't build now. For example, there's technology that's lost over time, or we never knew those things, from the past. So there's always these things that we're progressing on, but it's not always in a linear fashion for every aspect, because certain things become obsolete for newer technology. So older technologies were never developed as much, things like that. So we have to always check ourselves and be humbled by the things that happened before us, the things that will happen in the future, and not underestimate or overestimate these different scenarios. So we got to check ourselves, use history as a guidepost that helps hold us firm in what we think is probable and likely. And if some random scenario happens in the near future that never happened before, and people react completely different to how people normally react in these scenarios, then that's going to be the exception, and we can plan for that too. And the third thing, I guess I mentioned two things before, but the third thing we can do to wade through this volatility is to make sure that we're diversified in some regards in our portfolio. Now, diversification in terms of different asset classes doesn't guarantee us to have a higher profit. It's more something to help us to just not have as much volatility potentially. Let's look at my portfolio, my Robinhood portfolio, and see just how much volatility we have gone so far. It's pretty crazy. All right, well, let's look over here. So we start out and we dropped at the point of June 3rd, I think it was. We went down 16.3%. And then we get back up to the value of our position from April, a little bit higher actually. And then we shoot up to over 70%. Yeah, went over 70%. And then recently we crashed down from 70%, losing all the gains from that year, giving back over 5%, 5.33% down. So that was a huge move down. And then finally recently we've shot back up and are at a net over 49% gain. Is that right? Yeah. So that has been pretty crazy, just the moves that we've experienced in this past year. The most volatile year that I've ever experienced. And I think we're just going to see more of that. I mean, would I be sad if we just start going up? And probably not. Again, use some of these tips or whatever tips that you guys have to stay afloat in this time and to not make poor decisions, to be a good investor. What are some things that you do during this volatile time to make sure that you keep your even keel and to make sure that you position yourself to make the most of this time, especially since this is going to be, whether it was we're in it right now, the best time to be investing right now, or whether that's going to be in the weeks and months to come. How are you positioning yourself to make sure that you take advantage of this opportunity that may only come a few times in a lifetime? Let me know in the comments below, and thank you so much for watching, and I'll see you guys next time. Bye-bye. Man, it's so volatile this year. It's crazy. Man, my dog left. I hope you guys still here to watch this and watch my rant today. Appreciate you for sticking to the end. Let me know you stuck it to the end. Unlike my dog, he needs to go pee. Okay, I'll let him out. Okay, I gotta go. All right, see you guys.